Hello, everybody. Mark Weissy here from Maple Capital Partners, and we have another installment of these videos that we've been doing more recently, talking to entrepreneurs, some in real estate, many in other forms of business. But today we're really excited. We have John Rubino from JID Investments with us, and to give a little bit of a background on John's experience and his background, he's the director of KW United Wealth and the COO, founder, and managing partner of JID Investments. As I said, he has 20 years of real estate investment experience as an investor and over 11 years as a business owner. His focus is on alternative investments with a specialty in passive real estate investing. Over John's 20-year tenure as both a business owner and private real estate investor, he's raised over $40 million in capital across 40 plus real estate projects, yielding successful and consistent returns on investment for himself and over 250 other investors. John, that's a heck of a background there. I don't know if you want to, where you want to start about your experience, but I'll let you take it from here.
Thanks, Mark. Appreciate it. I was looking forward to this all week, and it's great to be with you today. Yeah, I mean, it's been an exciting journey, ride. It's been some roller coaster times up and down, but overall, we've done real well. I've enjoyed real estate, getting involved and getting to meet people, growing relationships, great network of people. Lived here in the Northern Virginia area for about 12 years now, and I was 20 years in the Navy. Retired back in active duty service back in 2017. Was a pilot in the Navy for quite a bit, and learned so much during my tenure in the military, which has really helped me become very successful, I guess. Not to pat myself on the back, but also really I've learned a lot, and it's definitely helped me become a better business owner and real estate investor. I started investing in real estate back in 2003, 2004, actively. That was kind of interesting, kind of a couple of years there, but found some new construction home builders, got involved with those folks down there in Southern Maryland, and I turned some really nice profits. Decided I was going to go overseas for a few years with my family on a tour to Italy with the Navy, and I invested with some good friends who took that capital that I made and turned it into some great returns. I was getting about a 10% return, and I did that for 7 years. So 70% over 7 years. I was getting the project packages and learning how to do due diligence and understanding what performers were, and just pulling up the information and analysis as an investor. So not only was I getting a great return on my money, but I was also learning how to kind of do the analytical work and really digging in deep. So fast forward to 2012-13, moved into the DC area. Knew I was getting ready to retire, and I was saying to myself, do I really want to go back to work for the government, or do I want to try something new? You know, being an entrepreneur has been in my family's blood, and they passed it down to me. I've got my mom had 7 brothers and 5 sisters, and all of my uncles and my grandfather were all business owners, supermarkets, all kinds of businesses. And my dad owned his own construction company in New York. So I was kind of, I had that entrepreneurial spirit and decided, like, hey, I really enjoyed doing this investing thing. Why not turn that into a business where I can bring that to some friends and family and those in my network to share kind of how to get involved in these types of investments, educating them, sharing with them, partnering with them. And at the time, my CPA, who's now our CFO, our Chief Financial Officer, he's down in Hilton Head. He had an accounting firm with 2 offices and started putting up some of our information. So his accounting clients and his friends are like, hey, what are you guys doing? And long story short, we've got about 200 investors now that we go out to who are in our network, our family of investors. We raise capital on a deal by deal basis, setting everything up through a private placement, 506B or C. Our attorneys do all the work there. We do our own due diligence. We form great partnerships with companies we've been working with. And so, yeah, over the last 12 years, we've invested on over 30 projects, about $40 million, and I've had some great success. And then about a year ago, I decided to jump on with some friends who are part of the KW family, KW Brokerage. We have a KW United office here in Alexandria, Virginia, and in Falls Church, Virginia. So 10 minutes away from the house, I get another 2 office spaces, and I get to teach people, I get to coach and mentor them now about how to raise capital and how to invest as either passive investors, getting into mastermind groups. So we're really enjoying it. We're growing it not only in the brokerage, but a lot of people in our network who just really want to learn more about investing passively passively. I know you and your team do a fantastic job. We actually have your newsletter that we have in our group that they can read up on the great things that Naval Capital's doing. And, we want people to get familiar with good people, good partners that can help them make money and then be on their team to support them and help them. So it's been a great ride, Mark, and it's, the Lord's got some good things ahead. So I'm excited.
That's awesome. Yeah, quite an impressive background. And first of all, I want to say thank you for your service. Always really
Thank
appreciate
you.
it. The opportunities that we all have to invest and grow our wealth in this country are only possible through the sacrifices of you and others like you. So really appreciate that.
Thank you so much. I appreciate it. It was an honor, sir.
Absolutely. So in terms of your background, I'll take a little bit of a step back. When you were starting to kind of look into real estate investing passively as a naval aviator, I'm just curious if there were any kind of crossover or transferable skills or any kind of mindsets perhaps that you utilize that you gained from your military experience that you utilize today in your entrepreneurship and real estate investing.
Absolutely. I mean, the soft skills, they call them, that you capture inside of being in an organization like the military and the Navy, any organization where, you have these very large and encompassing strategic goals and operational goals, and there's competition and there's taking care of your troops and your sailors. And there's so many things you learn from a leadership perspective, but you also need to know how to communicate, whether it's, talking to your commanding officer or you're talking to a four-star admiral and being able to convey the information that's really important to them and bringing them into your world from what you're capturing. So one of the things was obviously problem solving, never going to the boss with a problem, going to the boss with a problem and three solutions with your recommended solution. That's what my bosses wanted to hear. Or being able to write, an executive summary paper or letter to a four-star admiral who's got to make a decision. And so how do I bring him into my world? How do I help him understand what we're conveying to him as far as the issue, and then capturing it succinctly, briefly, and like getting him involved so that he can make an informed decision. So yeah, just some of those things right there. And then just the camaraderie of the people I've got to meet, the personalities. I had really great leaders that I emulated and I wanted to be a lot like, and I had them as mentors. And I actually had a lot of leaders that I just was like, oh, I don't know if I want to be like that. But you learn from that, and you put that into your bag of your experience, and that takes it over into the business world. And so I know a lot of times you hear people in the civilian world say, oh, somebody in the military, they're so rigid and this and that. Yeah, I guess a little bit, but the ones that really do well, the ones that utilize those skills and leverage those skills to empower others, to help others, to grow others, to bring that, that value-based type mindset and environment into your business is so important. So yeah, I am totally, totally so happy about the time I had in the military, the time I got to serve and honor my country. But at the same time, the military gave me back so much, and I'm forever grateful.
That's amazing. And your ability to, like you said, kind of communicate those maybe complex issues down to the salient points and get those across to organize yourself and your team and so on. I think those are definitely transferable skills. I always think of real estate as a people business. As much as we're
Yeah.
investing in physical assets, it's the individuals that are involved that kind of dictate how successful you are investing wise. So,
Absolutely, absolutely. And I mean, the Navy invested, millions of dollars in myself and other pilots to go through training and get to a point where we're then able to, get into an aircraft that's, worth millions of dollars and take a team up and fly combat missions or fly missions that, we're taking our crew and the aircraft into potential danger, but at the same time, them having the trust and knowledge of knowing that we're going to do a great job. And so again, that builds a camaraderie and integrity, all those things that you want to have in a business and in a person. So that's, yeah, I can't tell you how much I appreciated the time I had to serve.
that's amazing. Now, in terms of your investing history, you said that you started actually pre-Great Financial Crisis, pre-08.
Yeah.
So, that's something that I lived through as a student actually at that time. And, I could definitely see some of the impacts directly in my life, but it must have been an entirely different thing actually having been investing in real estate at that time. So I'm just curious what you learned from that process, kind of your experience there.
Yeah, it's exciting. So at the time when I got orders down to Southern Maryland, it was an Okefenokee area. It was very rural. It was country-like. But it was a decision made at the Navy leadership to move the three-star acquisition admiral down to that area, Patuxent River. So what that ended up doing is creating a huge surplus and need for housing because you've got this three-star admiral who's bringing, about 5 to 10,000 tenants down to the base. And who's going down there with them? Acquisition businesses like Raytheon, Booz Allen Hamilton, Lockheed Martin, all of these companies are now moving down there. So the need for housing just skyrocketed. And so I got into a really good situation where I bought my primary residence down there, right before everything started kicking off. So I got in there right before, like, it started to jump. So I had my primary residence, which I knew was going to do well. And then I just wanted to get in and find, what can I find to whether it's a renovation project or a borough project, and it was hard because everybody was seeing the growth that was coming and was excited about it, but it was very hard to find property. But then I was able to connect with a local area builder. They were kind of what you would do today, call a BTR, built to rent type subdivision, but it was actually built to sell. And so I got on with a home builder, and it was amazing. It was $1,000 investment. They were carrying the construction loan all the way through. And then it was a construction to perm loan once we got C of O. And about 2 weeks before C of O, I'm turning around and marketing it for 60 to $80,000 of what I bought it for. So it was amazing just to learn that. And I got hooked on that quickly. So I think one of the things I learned was seeing a market that, was very, very rural, and then all of a sudden it takes off, and the time that you've got to really get in there quickly to capture some of the opportunity, because once everybody starts seeing that, it's like, wow, it's coming. And that's also helped me analyze other markets and demographics. So I'm a big fan of the Southeast. I'm a big fan of the Mid-Atlantic. And the reason why is because of the things I saw when I was first investing, the growth, the population increases, the headquarters are moving to either Atlanta or Charlotte or Greenville or Charleston. So those are all the things I'm looking for in a demographic. And so, yeah, it really helped me understand that. And then I said to myself, do I want to do more active and kind of deal with the day to day? And being in the military is a little difficult. So I really decided, hey, let me take a back seat, but make sure I'm investing with very experienced, competent, seasoned, performing sponsors and operators that knew what they were doing. And trust is obviously a huge thing, and that's how our business model's been. Is we're going to go out and look for operators and sponsors that meet the criteria we're looking for in a business with the experience, and then bringing them to our investors, who are the individual check writers, right? So you got to be able to show your investors why you believe so much in this investment group that wants to utilize their funds and our funds. And we've got to feel good, and they need to feel as good as we do about those groups before we start looking at projects.
That's a great point, and I think you serve a vital purpose, you and your company, in terms of vetting those sponsors, and that's a really important part of the passive investment. I would say probably the most important part of the passive investment process is the upfront due diligence they have to do on the sponsor and on the deal secondarily. So, just curious for those in the audience who may be looking to invest passively, what are the steps, or what are a few of the top line things that you would recommend in terms of I guess sponsor vetting?
Yeah, I mean, first thing would be education. There's so much good stuff out there, but sometimes it's way too much. So, know where to look, know where to find the information. I teach a 7-part series on going from building your team to, looking at the sponsor, looking at the demographics and the location, asset classes, the capital stack, the documents you got to review, and then, how do I make money on a deal? So I mean that's my fundamentals of wealth training that I do, because that's where people need to look. That's how they need to focus. A lot of people are, and then the other thing is, why do you want to invest? Is it income substitution? Is it income growth? Is it more tax benefits and incentives? So you've got to gauge each person, and they've got to decide too. Hey, a lot of people like to leave the W-2 job, and that's great, but if you're going to go and invest to make income, you need to understand too that, what are the tax ramifications of that? Can I use depreciation? Can I not use depreciation? What does that mean? All those different things. So you want to have the right team around you. I'm a big fan of Robert Kiyosaki. I think that, he's the godfather of real estate and so many other things. And so when you read the Rich Dad Poor Dad books, that's what they talk about: building your team, getting to a point where you feel confident, given the team around you, have a good mentor, have somebody that's done it, who knows what they're doing, and talk to them, ask them if they can take you on have them as a mentor. And a lot of people won't disagree to that. And then just having your plan, build your plan on how you want to invest, whether it's I want to invest with this type of sponsor in this location and this type of asset class to make these type of return. And when you have that type of plan, it makes it a lot easier to start looking at sponsors and looking at different opportunities.
Yeah, that's actionable advice for anybody that's looking out there or maybe getting started to look at passive investments. So starting with education, finding a mentor, finding a team. I find that a lot of these real estate books, the more reputable ones, they always start the first chapter is usually, finding that team because this is a
Yep.
team sport. And so it's super
Amen.
important.
It
Yeah.
is. And one other thing, and I'll just, just real quick is I always tell people, and this is, when you're building a house, you don't start at the penthouse, right? You start with the foundation, you start with the basement, you start with the first floor. So the education is really important, but look at the things that you can invest in that are easy, like IRAs and Roths, things that are going to give you tax-free returns and tax-deferred returns. So are you maximizing that, or do you have the right basics in place so that then you're ready to go to the first floor and then the second floor and then the penthouse? A lot of people want to go to the penthouse, but there's nothing underneath there. The penthouse is just going to fall and crumble.
Absolutely. Yeah, you have to build a solid foundation there. And
Yep.
then that starts with a team. That's great. In terms of what you're doing today and helping to do some of this work for on behalf of your passive investors, how would you say, I imagine a lot of your business relies on the trust and the confidence that your investors have in you and your ability to vet out sponsors and deals. How do you build that trust for somebody that's looking to build a similar business?
Yeah, I think the trust is really built on the performance, but I think, well, especially over the last 4 or 5 years, the trust has really been solidified from what we saw with COVID and the financial ramifications, which we're still feeling, and then the interest rate increases and inflation, and so I think when you can show folks that you're really tough in the bad times. They know that you've done well in the good times. I mean, we started in 2013, and from 13 to 19, I mean, it was amazing, right? I mean, we were making, we were doing 10, 30, 40% above projections on our returns, which is unbelievable. And then all of a sudden you get hit in the gut and it's like, holy cow, like, you're now it's like, hey, that's why we've had the sponsors we chose. That's the why we've got the people we trust, because these are not just sponsors, they're family. They're people that we would, we would go to war with, right? And some of them are. Some of them are guys I went to war with, in the military who are now developers and operators. So, people see that. People see the passion you have. People see that you communicate. A lot of sponsors, unfortunately, over the last couple of years, have had problems run and not that they run, but they're fearful to share the bad news because there was always just good news all the time. And so you've got to be able to explain to people, hey, this is why we do capital calls, or this is why we said this in the documents, or here's why, the returns may not be as great. Yes, we underwrote a home run, but we're going to hit a single or we're going to hit a double. And guess what? You're going to make money. So you got to be able to have those difficult conversations. People understand. And that's something you as a person have to deal with too, is like, you get upset because you're like, man, I mean, we were doing so great. And all of a sudden this happens. And then you got to say to yourself, but why did that happen? And so, yes, I will take accountability for that. But at the same time, there's things that I just can't control. I can't control the Fed raising rates the way they did and inflation going the way it did. And, you just got to try your best to get through that and then learn from it, right? A lot of people want to be like, all right, I got through that difficult period. Thank God. I never want to do that again. Oh, way. What are you kidding me? What did you learn during that time? What happened during that time? How do you make yourself better, your business better? How do you grow from that? That's a huge experience that unfortunately we had to go through. But if you get through it, you learn from that.
Absolutely. And your
Yeah.
track record definitely speaks to that, being through
Mhm.
multiple market cycles, learning from each. I heard a quote recently that talked about Michael Jordan, and one of his teammates said Michael Jordan never lost a game in his life. And then he explained, he said he only won or he learned.
Yeah.
This whole loss vocabulary needs to be eliminated from, or failure needs to be eliminated from our vocabulary. We need to reframe it as it's an opportunity to learn and grow.
I agree 100%. I'm finishing a great book from Adam Grant called Hidden Performance. It's unbelievable. And it really talks about how, we have to get into this mindset that it's okay to fail. I mean, you don't want to intentionally fail, but, when you got on the bike the first time, I know I fell off the bike about 100 times before I started to learn how to ride. I mean, that's the process. You got to fall, you got to scrape your leg, you got to bump your head. It's just part of the process.
Absolutely. Yeah, and
Yeah.
you want to be conscious of time as well. So we've covered a lot of topics here. I'm just
Yeah.
curious now, looking forward. I know you've spoken, I've heard you speak very intelligibly about, the market cycle, where we are, the economy, things like that. What are you seeing? What is your kind of outlook for, either the overall real estate market or multifamily or whatever flavor you want to kind of break it down as?
Yeah, I mean, so we went from one extreme to another now. I think this new administration is doing some great things, but it's going to take time. I'm really excited to see what's on the horizon, but of course, there's a lot of shock and awe that have to kind of ferment a bit. We've kind of been running kind of steady in a pace over the last couple of years where we know that banks have been very, very stringent on lending parameters, and it's been very difficult to get financing and funding. It's always been easy for that in the past. It was finding the deal. Now it's finding the deals easy and trying to get the financing and funding. But we're starting to see, we do a lot of development deals and new construction projects. So, in the good old days, you could leverage 75% debt and was not a problem, 3, 4%, floating. Those days are over. Now, when we saw a lot of the difficult times when the banks started to come out, it was like 45, 50% leverage if you're lucky, 8, 9% interest rate. But that's starting to get a little bit better. Interest rates are kind of coming down a bit, maybe around 8, 7 and 3/4, let's say. And banks are starting to get a little bit better on leverage, 55 to 60% on a new construction or a development deal. So that's promising. I think that's going to get better. I just think it's going to take a little bit of time. And interest rates, I really think they're going to take a little longer than everybody expects. I think they're saying now maybe 1 or 2 drops for the year. And that's probably right. I mean, you got to do it the right way. But I think once the policies at the strategic level start kicking in, especially with energy and what they're doing at the border, it's all good stuff. I think it's just going to trickle down into the real estate markets. And the markets that are going to do well, I look at it as a sharpshooter. Look at those markets that are, the top 5 or 10 in the country. So like the Atlanta, Georgias, the Charlotte, North Carolinas, the Charleston, South Carolinas, the Greenville, I love the South Carolina markets because they're so strong. So look at those markets first because those are the ones that are more like recession or down cycle resilient versus like recession. And those are the first ones that are going to come out of it. So that's really a good way to look at it. But yeah, I'm excited. I mean, I think it's gonna improve, but it's still gonna take a little bit of time.
Awesome, awesome diagnosis of where we are and kind of where we're going. I guess we'll see. Time will
Hmm.
tell. But you've been amazing. Thank you so much
Thank
for
you. Thanks,
these.
man.
You've dropped so many gems, so many knowledge bombs. I call them during
Yeah,
this conversation. So I think there's a
yeah,
lot of actionable advice that folks who are
absolutely.
listening can take. Now, if folks want to get in touch with you, learn more about what you're doing, what JID investments is doing, how would they go about doing that?
Yeah, and please feel free to share in your show notes, but they could find us at JID Investments LLC if they do a Google search or just www.jidinvestments.com. I'm on LinkedIn, Facebook. I love to talk to people. I love to help them get going. Our program here at Kid United Wealth is amazing, and we've got a lot of excitement. There's the potential to take this nationally at some point. So, we definitely want to help people learn just how to invest and be part of a cool group. So, yeah, reach out to me if I can help answer any questions. We've got some great deals in the pipeline. We're doing opportunity zone deals, we're doing land development deals, we're doing triple net stuff. So really exciting and a diverse kind of array of asset classes. So yeah, love to talk to people.
Really appreciate it. And if there's one
Yeah,
corollary between your entire story, it seems to be the willingness to serve
amen.
others first for the
Thank you.
military and then educating others and helping them get started with their investment journey. So thank
And
you.
yeah, most importantly, serving the man upstairs. He's in charge, so he gets all the credit and all the glory.
Amazing. Awesome. Well, I'm sure
Yep.
that's going to resonate with a lot of people. So thank you
Yes,
again for your
sir.
time. And we'll sign off as we
Thanks,
always
Mark.
do. Absolutely. Be kind, be charitable, invest wisely. Thanks, folks.